Hey everyone, welcome back to Derivatives and Risk Education. I'm starting a new series here called Trader Insights, where I'll be sharing lessons and observations from my years on the trading desk. In this first episode, we're diving into a question I get asked all the time. What degree do you need to land a trading role? It's a topic with a lot of opinions out there, and frankly, it's changed quite a bit over the years, especially with the rise of quantitative and automated trading. In my 18 years on the trading desks and in risk management at major investment banks, I've seen firsthand the different paths people take and which academic degrees tend to set you up for success. So, in this video, we're going to break it down using a tier list. We'll rank common university degrees based on the advantage they give you for getting into a front office trading role. We'll rank degrees from S, representing the degrees that give you the most direct and significant advantage, all the way down to D, which means it's a much less direct path requiring substantial additional effort and learning to break in. Let's see where these degrees land on the list. First up, we have finance. This is probably the most traditional path many people think of for getting into the financial industry, especially in the US, and for good reason. A finance degree gives you a solid understanding of financial markets, different asset classes like stocks, bonds, and even basic derivatives. You learn about valuation, corporate finance, and how the financial system broadly works. Finance degree provides a highly relevant foundation, giving you the vocabulary and context you need to understand what's happening on a trading desk. It's an excellent, highly relevant starting point, especially for roles in cash equities, fixed income, or even standard derivatives. That's why we're putting finance squarely in the A tier. While you might need to supplement with more advanced quantitative skills for some desks, it provides a fantastic base. Next, let's look at humanities degrees. When we talk about humanities, we mean degrees like history, philosophy, English literature, and so on. These degrees are fantastic for developing critical thinking, research, writing, and communication skills. These are incredibly valuable in any career. However, for a technical front office trading role, the direct link is less clear. They typically don't involve the quantitative, programming, or specific financial market knowledge that trading desks require from day one. Because of that significant gap in technical and financial market specific knowledge, transitioning from a humanities degree into a trading role is a challenging path. It requires a serious commitment to self study, targeted internships, and often building those quantitative skills from scratch. For that reason, humanities degrees land in the D tier. It's not impossible, but it's a much less direct route. How about a business degree? These degrees give you a broad overview of how businesses operate, covering areas like marketing, management, accounting, and often introductory finance. They provide a good foundation in the commercial world and build general business acumen and communication skills. However, similar to humanities in some ways, they often lack the depth in specific quantitative methods or detailed financial product knowledge that a dedicated finance or STEM degree provides. Business degree provides a broader, less specialized foundation compared to finance or more analytical degrees. That puts business in the C tier. While it's a good start for understanding the business world, it generally requires significant extra effort to gain the specific technical and market knowledge needed for trading. Moving on, let's consider economics. Economics degree focuses on how economies function, analyzing markets, incentives, and economic policies. This is incredibly relevant for certain types of trading, particularly macro trading, where understanding global economic trends, interest rates, and central bank policies is crucial. Many economics programs also involve quantitative methods and data analysis, providing a solid analytical base. An economics degree provides a strong analytical foundation and direct relevance for understanding market drivers, especially on a macroeconomic level. It's generally more quantitatively rigorous than broader business or social science degrees, but perhaps less focused on specific financial product modeling than the degrees in the S or A tiers. That's why we're placing economics in the B tier. It's a solid foundation, particularly valuable for macro focused roles. Next up, engineering degrees. Whether it's electrical, mechanical, civil, or other, engineering degrees are renowned for developing strong problem solving skills, logical thinking, and analytical rigor. Engineers are trained to build systems, model complex scenarios, and often have solid quantitative and programming skills depending on their specialization. These are incredibly valuable skills on the trading desk, which at its core is about solving complex problems under pressure. The strong analytical and problem solving toolkit provided by an engineering degree makes it a highly sought after background in finance. While engineers need to learn the specifics of financial markets and products, their core skill set is incredibly transferable and valuable. That's why engineering degrees land in the A tier. Let's talk about mathematics. This is a foundational quantitative discipline. Math degrees provide deep training in areas like calculus, linear algebra, probability, and abstract thinking. These skills are absolutely critical for understanding complex financial models, derivative pricing, risk management frameworks, and quantitative trading strategies. The ability to think rigorously and work with abstract concepts is a huge advantage. Mathematics provides one of the most direct and powerful analytical foundations for the most complex and quantitative areas of trading and risk management. Its rigor is unparalleled in developing the kind of abstract problem-solving ability needed for advanced financial concepts. That's why we're placing mathematics firmly in the S tier. How about arts degrees? Similar to humanities, arts degrees like fine arts, music, theater, etc., develop creativity, discipline, and unique perspectives. These degrees are valuable, but like humanities, they have very little direct overlap with the technical, quantitative, or financial market knowledge required for trading. While creativity and discipline are assets, the gap in required technical and financial knowledge for a trading role from an arts degree is significant. It requires a major pivot and dedicated effort to build that foundation. For that reason, arts degrees are in the D tier. Next, let's look at computer science. This field is increasingly vital in modern finance. CS degrees teach programming, algorithms, data structures, and computational thinking. These skills are essential for building trading systems, analyzing vast amounts of data, and working in automated trading environments. While perhaps not providing the deep theoretical maths for derivative models that a pure maths degree does, the practical application of programming and logic is incredibly valuable. For areas like high-frequency trading or certain types of quantitative trading roles focused on execution and infrastructure, a computer science degree is exceptionally strong, often considered a top-tier background. So computer science provides a very strong and increasingly relevant technical base. Its programming and logical problem-solving skills are highly sought after. While it sits below the most theoretically quantitative degrees in the highest tier for pure mathematical modeling, its foundational technical skills make it a B-tier degree with significant potential. Now, let's place statistics. Statistics degree is focused on data analysis, probability, statistical modeling, and inference. These skills are absolutely fundamental to quantitative trading strategies, risk management, and analyzing market data to find edges. Understanding probability distributions, regression analysis, and hypothesis testing is directly applicable to financial markets. Statistics provides a powerful and directly relevant quantitative toolkit for many aspects of trading, particularly those involving data analysis and modeling. It's a highly valued degree in finance, placing statistics in the A tier, recognizing its strong analytical rigor and direct applicability. Let's consider chemistry and other STEM degrees. This category includes other science or technical degrees that might not be as directly quantitative as physics or statistics, or as directly applied to systems, as engineering or CS, but still involve scientific methodology, data handling, and analytical processes. Chemistry, for example, involves rigorous experimental design, data analysis, and understanding complex interactions. While these degrees provide valuable analytical skills and scientific rigor, their direct relevance to financial markets or quantitative modeling for trading is less pronounced compared to degrees in the higher tiers. They provide a foundation, but require a more significant pivot to acquire finance-specific knowledge and the quantitative depth needed for trading. For that reason, chemistry and other STEM degrees fit into the C tier. Almost done with our list. Let's place physics. Physicists are trained to understand fundamental principles, build mathematical models to describe complex systems, and solve abstract problems using quantitative methods. This rigorous approach to modeling and problem solving is incredibly valuable in quantitative finance, particularly in developing complex pricing models and understanding market dynamics. The ability to simplify complexity and apply mathematical tools is a core asset. Physics provides an extremely strong quantitative and analytical foundation, highly prized for its rigorous approach to modeling and problem solving, which are directly applicable to quantitative trading and complex derivatives. Alongside mathematics, physics belongs in the S tier. Alright, we've reached the very last degree on our list, and this one is particularly relevant if you're aiming for the most cutting-edge quantitative parts of the trading world. It's quantitative finance or financial engineering. They combine advanced mathematics, statistics, computer science, and financial theory. They teach sophisticated modeling techniques, derivative pricing, risk management, and computational methods directly applicable to trading and quantitative roles. These are often master's level degrees, and pursuing one after a strong analytical undergraduate degree, like maths, physics, engineering, or computer science, is a very common and highly effective path into quantitative trading. Degrees specifically designed for quantitative finance provide the most targeted and advanced skill set for the analytical demands of modern trading. They build directly on foundational quantitative skills and apply them to financial problems. For that reason, quantitative finance and financial engineering is firmly in the S tier. So, there you have it, our tier list for the best types of degrees for getting into trading, from S all the way down to D. Looking at the final list, you can see that degrees with a strong emphasis on quantitative skills and analytical thinking tend to rank highest. This reflects the increasingly technical and data-driven nature of modern trading. However, it's absolutely crucial to remember that your degree is just one piece of the puzzle. While a degree from a higher tier gives you a stronger academic foundation and potentially opens more doors initially, success in trading ultimately depends on much more. Developing practical skills, learning to code, Python or C++, understanding the market microstructure, using trading platforms, also gaining experience. Internships are invaluable for getting your foot in the door and proving yourself. Networking, building connections in the industry, continuous learning because the markets are always evolving. Passion and grit. Trading is demanding and requires dedication. These non-degree factors are incredibly important. If you'd be interested in diving deeper into any of these topics, let me know in the comments below. I might cover those in future videos. So, this was the first video in the Trader Insights series. Let me know in the comments if you have any requests or ideas for topics you'd like me to cover in future Trader Insights videos. If you found this helpful, please hit the like button and subscribe to Derivatives and Risk Education for more videos on finance careers, derivatives and risk management. Thanks for watching.